This is Ken Jacobson. I'm a senior mortgage planner and a loan officer with Home Trust Mortgage with the mortgage market recap for the week of the 12th through the 16th. Houston, we're finally seeing what we've been waiting on a long time. Lower rates for longer. How's that affecting the housing market? First of all, inflation is holding steady. December reports came in, went up a little bit month over month, but long term, the bigger picture stayed intact. More importantly, the core rate, now that's what the Fed concentrates on, came in right in line with expectations and held steady year over year. That tells us again inflation pressures are not reaccelerating. It gives the Fed more flexibility, and it keeps pressure off of mortgage rates going higher. The labor market is no longer dragging things down. Weekly employment data showed jobs turned positive. Not strong, but a lot better than negative. This points to a labor market that's cooling, not breaking. And that's the sweet spot. Enough stability to support housing without reigniting inflation. Housing demand is clearly responding. This is where the story really gets interesting for you. Both new home sales and existing home sales came in much stronger than expected. New home sales are now at their highest level in almost 3 years, and existing home closings are also running at the strongest pace we've seen in a long time. What's driving it? Lower rates for longer. Rates have stayed low long enough that buyers are stepping back in, and they're doing so in meaningful numbers. Supply is tightening again. At the same time, demand is improving. Inventory is moving in the other direction. Existing home inventory dropped sharply in December. It's seasonal. It always does. But it's now only slightly higher than it was this time last year and well below what we'd consider a balanced market. Months of supply of homes has fallen back into clearly tight territory because builders have pulled back and they can't quickly add supply. Improving demand is likely to put firmer pressure on prices, higher, not lower. This is a key point if you're a Houston buyer and you're waiting on prices to fall further. Supply is not moving in your direction. Mortgage applications have confirmed this. As rates move lower, purchases activity jumped sharply last week and remains well above last year's levels. Refinances surged. They only surge when you get meaningfully improvement in rates. Buyers and homeowners are responding quickly to changes in this affordability. We're seeing a rare combination. Rates staying relatively low and stable, demand clearly improving, inventory tightening. That combination doesn't usually lead to falling prices. It leads to firmer pricing and increased competition over time. For Houston, that creates opportunity, but not indefinitely. Markets don't usually announce when the shift is over. They just move. Don't miss this. Let me walk you through the numbers. Call me on my cell. It's 832-524-5253. Thanks for watching. Have a great day, a great weekend, and God bless you. And be safe out there.